in this episode of Diamonds in the Rough.
So Len, I'm going to ask you the one uncomfortable question that I can think of for you, which is, do you still own BTC?
No.
So welcome to Diamonds in the Rough. We're going to talk about how to turn thousands into millions, and we're going to focus a lot on Bitcoin Satoshi's vision, but not exclusively. We think it's a 20 to 25 year trend. There's going to be a lot of opportunity in the next couple decades. And so I think there's going to be a lot of material, and we aim to cover it in a very analytical, professional way that's a part of our background as an analyst and entrepreneur. And it's aimed at both the venture capital world as well, especially in the beginning here, because there's not many public companies that are in Bitcoin, but also equities and some of that. Some of the episodes will revolve around tech companies that you are aware of and are publicly trading. And that's what we aim to do. And we welcome you to pick and choose your podcasts, and in the future we'll have some ways in which you can actually contribute to what we talk about next. So I want to introduce my friend and partner, Len Mazer, who's coming in from Texas. How you doing, Len?
Good morning, Jack. 6:30 on a Saturday is a great time to talk about Bitcoin and some.
Yeah, it's a bit early, huh? You gotta get up before the kids and everything. So it's that's not easy. So we're looking for a little time slot here before the family wakes up. How's it? Is it quiet where you are now?
Yeah, I love the mornings. It's super quiet. Nobody's out. It's like a zombie movie.
So what I wanted to get into first, Len, was the topic of the day is Bitcoin Satoshi vision. And we both ended up here by completely different means independently. I think we talked about a lot of things over the years, but not a lot recently, I guess. But somehow we both ended up in Bitcoin. And I think over the last year, we've been discussing it quite a lot, arriving at times different conclusions, but sort of trending towards the same endpoint. And wanted to kind of ask you, how did you get into all this? And start from the beginning. I think it's really interesting, and I think we miss it a lot. There's a lot of people in the community already. There's probably 20 or 30,000 already, and yet we rarely find out kind of what the path was. I think even with Craig Wright, who invented Bitcoin, I feel like there's a lot missing to his past and how he got into it. Especially in the pre-2008 years. And we have little drips and drabs, but I really like to know how people got there. So
yeah,
how did you get into it?
Yeah, sure. So for me, Bitcoin was the perfect storm intellectually and professionally. For the past 19 years, I've been at the intersection of finance and technology. I've been a technologist in the finance space. And before I dive in, I'll share a fun story that will inform a lot of the dialogue later on. So in 2009, just a year after the near meltdown of our financial system, the $3 billion hedge fund I was out was closing its Dallas office, and we parted ways, and I took my severance and decided to have some fun in Q4 of 2009.
Len, were you in New York at the time? Because that's how we know each other from Manhattan, but were you already in Texas by this point?
I was in Texas. I moved down here for a specific job to run trading and risk technology for this fund. And I was there.
What
so
year?
I was making my way back, but I was in Texas. I was sort of intra-city at the time. I went back for a little bit.
What year were you in Texas?
I was in Texas, yeah.
No, what year were you in Texas?
Oh, this is, I moved down here in 2005.
Okay.
Yeah. And was making my way back to New York around 2009. Met a girl, became a Texan, have kids, family here now. So I decided. So after I left, I decided to take a vacation, and I flew down to Buenos Aires. I got off the plane. I went to the first foreign exchange booth that I saw. I didn't even cross customs. I got like 200 pesos wrapped in a piece of paper that said, be careful of counterfeit. I walked out of customs, went to the taxi, looked at the foreign exchange booth. Never mind that the rates were like 30% worse just by crossing the threshold than inside the airport. But got into my taxi, got driven to my hotel, went to pay. I took out this packet of money. I took out 20 pesos and I gave it to the gentleman. And he looked at it and he said, "I'm sorry, I can't take this. This is counterfeit."
Oh, no.
And I said, "What do you mean? Is this a joke?" He's like, "No, I'm sorry." So he wouldn't accept my money. And that was like an incredible experience. Really rattled me.
How much money was it?
It was 20 pesos. So I think I had 200 pesos and it was a $20 bill, 20 peso bill.
What was your whole 200 pesos bad, or was it just
just that one bill? Just that one bill. And I tried to spend it the whole week, and everybody knew. I could not tell, but everybody knew. Like, everybody was already programmed to check for counterfeit.
Wow.
I couldn't, there was no customer service to call. There's nobody to complain to. The banks wouldn't take it back. I felt like I got stolen from.
Well, so I thought you were going to say that the guy told you it was bad, and you have to hand that over to me. That's part of Argentinian rules. Hand me the 20 peso bill, and then he would just run off with it.
Right. No. This was, you get stolen from effectively, right? And you have you don't even know how to how to bring justice into the situation. It was a very helpless, shitty feeling. Pardon my French, but I ultimately ended up, I think, getting rid of it at a nightclub. But it soured my whole experience. I was there for 8 days, and I think I really had like half the time. I was just really upset about the situation. So anyway, and this is on the backdrop of 2009, right, when we're already trying to make sense of our economy. The Fed, what the Fed has been doing with the continual devaluation of the currency is a concern. And so that's sort of it was like backdrop.
It was kind of like COVID, only it lasted a lot longer.
Yeah. Well, so how did I find Bitcoin? I found Bitcoin initially in searching for microtransaction payments. In 2013, I had an app idea. The business model of the app was to charge $1 for various social interactions. And so, of course, in today's 10-second attention span, you need to have a very good user experience and a quick payment user experience. So I began researching various payment options. And the first one I went to was ACH. And that wasn't going to work because you had to do the 10-sec, the 2 small deposits, wait 2 days, ask the user to confirm. And that's not going to cut it in today's day. And obviously,
so you knew that your users would no way, shape, or form stand for, all that rigmarole just to do your app.
No way. Not in 2013. Possibly in the 90s, but no.
Right.
Then of course the next obvious choice is Visa, MasterCard, and I quickly realized, I was like, hey, all my money transactions are done through Visa, MasterCard. Everybody has it. Our money's been digital. I looked into that, and that cost was 3% of the transaction and 30 cents a transaction. So that was 33% of my gross proceeds are going to the transaction.
Yeah, so that sounds about right. That matches my research as well. I just think of it as 30 cents. The 3% is really the...
it doesn't matter, right.
3% is the awful part when you're buying something expensive, but the 30 cents is the awful part when you're buying something not expensive.
Right. And it effectively snuffed out that business. And I started to think to myself, wow, there are so many business models out there that can't be deployed because of this limitation. And we're making so many micro interactions online as we move our identities and everything there. This seemed like a big opportunity. And so I had known about Bitcoin since 2011. I discounted it like most people as criminal money and as just, some geeky thing. But I decided to revisit it because, I knew it was a payment network and it was gaining more steam and a lot of smart people were paying attention to it. So it was always in the periphery. And I read the white paper and that was, pretty pivotal. I mean, I thought that thing was as important to me as the Declaration of Independence. I mean, that was a really, really beautifully crafted document and concept.
That's amazing, because I didn't get that from it at all. I just looked at it as a technical paper written by a typical engineer, and it didn't make a lick of sense to me. It was just a bunch of techno jarble that was sort of put together, and it seemed to have a coherent endpoint, but it wasn't clear to me at all how any of it worked or why it worked. When I read the white paper, but I only read the white paper probably within the last 2 years or so.
Yeah. I mean, I think the expression, the way, the crafting of that and the concepts that it took were fairly revolutionary. And I mean, we can get into why it's beautiful. I think it's, this recipe of cryptography and incentive engineering, which I think is just as important. And this ability to now open up, create new markets, as an implication of this tech was pretty profound to me.
So you read the white paper in 2013, and were you like, how technical were you in 2013? Like, how much the white paper did make sense to you? So,
I mean, I have a software engineering background. It made a lot of sense. I'm not a cryptographer, but the tech made a lot of sense. I really liked how Satoshi simplified things, so you didn't need to really necessarily be much of a technologist to get it. So I got it completely. I mean, I thought the biggest part is, right, you have this disinterested group of miners, this decentralized clearinghouse that are incentivized to do it, and there's a double purpose to their being, and they're incentivized by money, and they can clear the transactions, and that can create, two different industries, right? And now, if we now are enabled to have this network that can do, 100 millionth of a cent transaction, that was like a really meaningful thing.
So what was the fees back then in 2013 were pretty much zero, weren't they? I mean, did they even start charging?
They weren't zero. They were small. So after I started to read it, then I began to test it. I really wanted to play with the technology to understand where it was, given the sort of oncoming hype. I downloaded a couple wallets. I transacted between wallets. I had hired a programmer on Elance to help me try to put a document onto the blockchain to see how much it would hold and what that process was. And it wasn't a very good programmer. We couldn't successfully do it. And then I realized the blockchain isn't, you can't store, a 10 meg PDF file then. And so you're still trying to figure out how is this thing going to be used? Because a lot of the jargon at the time too was, it's not just the payments, it's the blockchain. What does that mean? And there was all this overuse of blockchain, right? And so you think it's also this database, because it's three things to me, right? It's a database, it's a store of value, and it's a network. And you can look at each one individually, or you can kind of look at it as this whole collective recipe. And where you go with its implications is what you focus on. So
that's a good outline. The three things. I think that's about right. Yeah.
Yeah. But in testing it, it was pretty enlightening because, I work in the hedge fund technology world, helping funds a lot of times prepare, due diligence questionnaires to be able to accept institutional money. And cybersecurity has been and was then a very high, forefront object because, in the hacking world, I mean, the offense has just been crushing the defense, right? I think it just seems like any willing party can compromise a machine. So I've just assumed my computer was always hacked. And it was very scary to then recognize that now I'm storing actual money on my computer. Before, it's like, let me ask you this, Jack. When Equifax got hacked, how upset were you? Right?
Well, I wasn't upset at all because
Right.
I didn't keep any money on my computer. But
Right. Right, but they have like a trove of all your data, right? And they know all your accounts and everything, but it's an abstraction. They don't actually hold your money, right? Our system's still are relatively good because we trust the bank to store our funds. They spend billions of dollars securing it. There's insurance. So like one of the reasons I used credit card, and I actually used to work in credit card fraud as an intern in one of my early jobs, was like one of the nice features of credit cards is if there's an illegitimate transaction, they'll credit you the money. You won't lose it. You're secure. So there's trust baked in, and there's a value there. So now we have this new rogue financial system run by all these these technocrats and a lot of really smart hackers. And you now have money sitting on your hard drive, and that's very terrifying. But I was very intrigued, and along the way, I found a bunch of Andreas Antonopoulos videos, who to me was the Carl Sagan for me of the crypto space.
oh boy,
And I've come around. I've changed a lot, but at that time, I was really into that vibe of that honey badger, unconfiscatable. Governments can't stop this. Look, I compare it to the high school girl who meets the bad boy and she's like enthralled with them, and that was sort of the analogy that I had. It was like a very
the funny thing is that I feel like you must have been starting to think of it more from a buy it, make money standpoint rather than doing your business idea on top, because it sounds like you got to a point where you sort of said, this isn't going to work for my business idea at all.
Yeah, no, I was there. So I moved on to this is a massive investment. Then I started backing into what is this asymmetrical risk that I'm observing here? What does this mean? And just the back of the envelope calculations I made was, I did a little bit of research on microtransactions. I came to a valuation of 300 billion at that time, which is probably minuscule and wrong. But then I started to evaluate the store of value argument, right? And then that was
by the way, let's complete the story. So with your business idea, which you haven't fully described, but was it killed by the fact that you not only found that Bitcoin didn't work for it, but you also found that nothing worked for it because you were trying to do essentially a dollar or less transaction? And so did you come to the conclusion that really just it wasn't a viable idea, and so you sort of put it on the back burner for a long time? Or kind of what happened to your the original business idea that made you look at it as transactional money?
Yeah, I mean, I didn't. So ironically, I wanted to call it Ripple, and that's how I found in researching domain names. That's how I found Ripple name. The idea of the app was actually like a social app. I wanted to create an app that propagated gratitude to your friends. So in this day of social networking, it seems like we're very much incentivized to be self-aggrandizing. And a lot of the people that gain success are because you have to be really good at self-promotion, and that just never really sat well with me. I want to go back to a time where somebody's social currency sort of was more established based on what other people would say about them. And I had an app idea where it's like, say, hey, it was initially going to be in the form of gratitude, where I would send you a message and you would receive a text that says, Len is grateful for Jack for the following 5 things. And you'd see, hey, Len just sent you a text and he's grateful for you. So you're obviously going to click it because it's going to make you feel good. But there was an interesting incentive aspect to it. I would not allow you, so you could not reciprocate that. I wanted you to take that good feeling and propagate it to somebody else who like you thought about, who you wanted to share something you're grateful about. And I wanted to disincentivize people from reciprocating the need to like, well, Glenn just said something nice about me, so I'm going to say something nice about him. So I was going to put a paywall in that interaction. It's almost like a social experiment. So for you, if you wanted to feel obligated to say something back to me, you were going to have to pay $1 to the app. Right. But if not, you could take that good feeling, and the idea was to try to pay it forward and create maybe more goodwill in the world.
I see. So if you say nice things about other people, it's free. But if you try and reciprocate, there's a little bit of a monetary resistance there to prevent everybody from just scratching each other's back, kind of thing.
That's right. That's right. And I wanted to see where that would go. And I thought, hey, like anybody who gets a text from their friend that's going to say something nice, they're going to open it. So I felt like the virality of something like that would be pretty big.
Well, that would be a nice. That'd be a nice change from Facebook for sure.
Yeah. Right. Right.
So did you shelve the idea entirely because you just couldn't find a payment mechanism?
I did. I shelved the idea because the payment system wasn't there. I lost a little bit of, I mean, that was primarily it. I couldn't find a way how the business would support itself. But along the way, then I started to evaluate business, Bitcoin itself as an investment. And at that time, it was just one happy family, one fork, no competitors, right? Ethereum hadn't been released yet, or nobody else. And I just thought this was, the math I did was.
Well, now, what's the date here? Because, if you had done all this in 2013, I think at that point, the only thing that had really been changed in Bitcoin was I think they had introduced the pay to script hash, sort of messed with things a little bit, but not really from a payment standpoint. I don't think. I believe that the fees were still probably pretty low then.
So honestly, I didn't. I was evaluating it from just like fresh eyes as a new user. And the user experience was so clunky and complicated. And me being a professional 20, whatever at the time, 16 years in building financial apps and understanding it, and also like working with ex-NSA guys and understanding a bit about security, it was like an intimidating experience for me. So I just thought, no way is a normal Joe going to be able to tolerate this, nor do we have time to sit and spend making sure our network, our wallets are secure.
Right.
So
So Bitcoin was attractive from the payment fees aspect, but it was a total no-go because the ecosystem was basically close to zero at that point. There just wasn't a lot built to make things friendly for the user.
Correct.
And that's interesting because we're still in that point
we're
today,
still there.
Although way better. I mean, I can actually tell you some recent experiences about onboarding people that are way better than they were just a year ago. And part of that is because some of the apps that have developed within the last several months, you can bring somebody into Money Button with just an email. And once they get their Money Button, you can say, hey, you can go to Gemscape and maybe take some surveys and make a little bit of Bitcoin and finance your wallet without ever having to go to your bank or a credit card or an exchange. My app, or one of my apps, Slictionary, you can actually we have a new thing called Word Bounty, which sort of completes the app in a way, and I'll get into that in a later episode, but. It is also a place where you can go make a little bit of money rather quickly. And then there's another one that just came out called Obsurv. It's OBSURV. And that one's probably the simplest of them all. They've been running almost a daily survey. And if you sign up for that, you can make a couple pennies every day. Sometimes it's like more than a quarter, which doesn't sound like much, but as you're probably finding out, and I've found out, pennies in Bitcoin right now takes you a long way. You can actually do a lot with just mere pennies because of the microtransactions aspect. And so things are actually a lot better now than they were a year ago. And a year ago, they were probably a little bit better with the introduction of Money Button and some of the other wallets like Handcash. They're a lot better than they were certainly for you in 2013.
Oh yeah, no doubt.
But you didn't have any of that.
No. I mean, no. I basically, when I decided to buy some Bitcoin, I just used Coinbase, which I thought had the only user experience game in town, pretty much. And
that's right. Coinbase came out in about what was it? Late 13, mid 13. It was a little. I remember it because I tried to buy. I kind of came to the conclusion that whether Bitcoin is real money or not, which I didn't have the analysis done by then to know. I only knew that in the beginning of 2013, I was having a real struggle trying to come up with investments on the long side. I was doing long short investments. And at that time, the Fed was printing tons of money. And I came to the conclusion that, Wall Street being smarter than the Fed was going to sell the news, meaning, okay, everybody knows you're going to print money. And that helped the market, do pretty well in the back half of 12 and part of 13. But that was going to end quickly because people are going to say, well, now everybody knows that you're printing the money, and it's not, that's just how Wall Street works. It's very backwards. It's like, I call it like a game of secrets, where once the secret is open to everyone, then the reverse happens of what the secret unfurls, right? So, whisper, the Fed's going to print money, starting really heavily in early 2013, you should buy stocks, and then once they announce it and they start actually printing, usually, this is where the retail investors get really confused, is they'll say, well, wait a minute, Microsoft just made this acquisition. Isn't that going to boost the stock a ton? And it's like, well, yes, if no one knew, but everybody's sort of known this for several months. Whereas in that case, it was almost a year that everybody was prepping for this quantitative easing. And so I came to the conclusion I couldn't find any longs because everything was priced up at that point. It was really early 13. I thought, man, this Bitcoin thing looks like it could go up 10 times, no problem, or 100 times. If you compare it to the size of money, and if you apply sort of a 1999.com thing to it, or multiple to it, you could really see it going far and fast, as nobody was really using it back then, but you could see you could almost see that 2017 year coming at some point. And so I remember looking at it and thinking, all right, let me try and get into this. And then I started looking into how to buy it. And it was absurd, right? I mean, I think this is the part you're talking about. I came to the conclusion that if I wanted to put, a large chunk of money, for me, I was a professional investor. So I wasn't talking about buying $1,000, right? I had a ginormous short portfolio that needed protection on the long side, just in case I was wrong that the market wasn't going to crash. And believe me, I was very wrong in 2013. And I needed, I think the reason why I needed a long was because I was riding Apple extremely well in 2012, and I just crushed it. Had a great year. And but due to the internal machinations of Apple at the time, they were sort of a sell the news stock. I knew that people were going to get really negative on it. And sure enough, by, spring of 2013, everybody was declaring the end of Apple, and that, Android had officially taken over, and they had 80% market share and all this other nonsense. And I knew all that was wrong, but I also knew that the market doesn't care what you know. They only care what they think they know. And at the time, they thought they knew that Android was the winner. And so I was like, oh, I've got nothing to buy here. Just everything looks expensive. Everybody's acting crazily. And so I saw this Bitcoin as an opportunity, and man, I was like, well, how can I get a lot of money in there? And I realized that after just doing a little bit of research that I was going to have to go to some like cafe or dark alley and bring some cash and start paying individual people to give me private keys